the goods and services they have to offer for others which they need. They bargain till a price is agreed, then the goods are handed over and money is given in exchange. This money can be used to buy other goods. So we say money is a medium of exchange. With it, people can buy and sell. That is, they can exchange the goods and services they need. This money may be in the shape of metal coins, or it may be paper money, notes, which usually represent fairly large numbers of coins. Here is Mr. Parma, who owns a grocer's shop. All day long, coins and notes are paid over to him by customers who buy his goods. At the end of a day or so, he has a fairly large sum of money in his shop. Imagine what would happen if he kept all this money on the premises. He would have to find a safe place to hide it in case it was stolen. The room chosen for this purpose is up. The cupboard used for storing the money would also be locked. In time, this would get too full and other hiding places would be needed as more and more money accumulated. Perhaps a hole under the floorboards might do for a time, but soon this too would be filled up. But besides receiving money, Mr. Parma has to spend it. He's ordered a new refrigerator from the International Trading Corporation. The bill for this is £500. Once the machine is delivered, he must pay over the money for it. If he took the money along in cash like this, he might need police to see that it wasn't stolen. And at the offices of the International Trading Corporation, the money would need counting note by note and coin by coin to see that the amount was correct. This was how people did do business centuries ago, but nowadays there's no need for such clumsy methods. What Mr. Parma actually does is to collect the money from his till each day, and instead of hoarding it and worrying about its safety, he takes it to his bank. For a small charge, the bank will look after his money and pay out sums at his order to other people. At the bank, Mr. Parma hands over the money he's brought. He also hands over a book called a paying-in book. This is a book of forms in which he's written down the amounts of notes and coins he's paying in. The bank cashier counts the money which has been handed over. He must be sure that the entries in the book correspond with the money received by the bank. When this is done, he stamps the book, and this stamp acts as a receipt. He tears off and keeps the counter Parma. After being entered in the books of the bank, the amount paid in by Mr. Parma is typed onto a sheet which records how much money Mr. Parma has in the bank. This record of money paid in or drawn out is known as an account. Money paid in is credited to a customer's account. Money drawn out is debited to a customer's account. From time to time, Mr. Parma receives a copy of his account in order that he may see how his debits and credits stand. This is called a statement of account. As well as a book for paying money into the bank, Mr. Parma has another book of forms called cheques for drawing money out. On each cheque, he writes the amount of money to be taken out of his account and the name of the person to whom it's to be paid. This is the way he pays the International Trading Corporation the £500 he owes them for the refrigerator. Mr. Parma sends the cheque by post to the International Trading Corporation. Once received there, it's taken to the bank where the corporation keeps its account. In the statement of the International Trading Corporation, the £500 is entered in the credit column and their balance is increased by £500. Next, Mr Parma's cheque must be sent on to his own bank. For the exchange of cheques, a central clearing system exists. By this means, hundreds of thousands of cheques are sorted out each day and directed to the bank on which they are drawn. So Mr Parma's cheque goes through the central clearing system where it's sorted and sent on to his bank. In Mr Parma's statement, the £500 is entered in the debit column and his balance is reduced by this amount. The transfer of the £500 is now complete, and in due course, Mr Parma receives his statement together with the cancelled cheque. Let us watch this once more as it actually takes place. Mr Parma writes a cheque for £500 drawn in favour of the International Trading Corporation. He sends it by post to the Trading Corporation's representative. The representative pays it into the Clydesdale Bank, paying in book in the same way as with coins and notes. Its receipt is duly acknowledged by the bank's stamp. At the end of the day, it's packed with other cheques for dispatch to the clearing system. In the clearing system, all cheques are sorted out according to the bank on which they're drawn. The £500 cheque is sorted into the pile relating to Mr Parma's bank. Every cheque going through the clearing system is photographed in one of these machines. This photograph acts as a record in case of loss or mistake. Now the cheque arrives at Mr Parma's bank. It's cancelled to show that the bank has received it. The clerk examines the cheque to see that it's in order. The signature can be compared with a specimen signature that's kept at the bank. In Mr Parma's account, there's enough money standing to his credit to meet this payment. The £500 is now written into the debit side of his account and subtracted from the balance available to him at the bank. When Mr Parma next receives his statement of account, he'll get all his cancelled cheques with it. He can see that no mistake has been made in keeping the account. Each cheque is identified by its number, and the amount drawn on it is entered in his debit column. The last cheque on this statement is that made out to the International Trading Corporation. He sees that the settlement of this payment leaves him with a balance of nearly £8,000. He decides to invest half of this in a new shop. The shop that Mr Parma has in mind will need alterations, so he calls in an architect to work out plans for this. The architect submits an estimate of the cost, and he and Mr Parma discuss the plans in detail. Mr Parma decides to go and see his bank manager about this new venture, as he'll need to borrow fresh money for help in stocking the new shop. He means to keep at least half of his balance available to run this extended business. Usually, banks will lend money for business of this sort if the proposal seems reasonable. Before he agrees to make the loan, the bank manager discusses the proposed business. He looks over the plans and discusses the possible costs and profits. he judges whether his client is likely to be successful in the handling of his affairs. But above all, the bank manager must be assured of the soundness of the venture itself, and he may require security for the money he's to lend. This means that the bank will be given control of articles with a cash value. In this proposition, Mr. Parma offers his life insurance policy and the deeds of his present shop. Together, they're valued at perhaps £6,000. The bank retains possession of these as security for the £4,000 it will lend him. Eventually, he'll pay back the loan plus a small percentage as interest. Mr. Parma gets the alterations to the new shop finished as soon as possible so that he can begin to pay off both the loan and the interest on it. Soon, the new shop is open for business. Meanwhile,